Okay, we continue the lecture with the part 2 of this topic. Okay, so for this part 2, previously in part 1, I already explained that there are few organization or there are few global bodies that have played their effort towards the harmonization. One of them is IISc, okay, or later it's converted to ISB. So for International Accounting Standard Committee, IISc, the IISc is actually established in 1973 by leading professional accounting bodies in 10 countries. And the objective of this IISc is actually to formulate one international accounting standard. But the formulating international accounting standard, even though they said that the conversion it's difficult to do, but this IISc tried to formulate one the accounting standard that can be used in globally. Okay, so what they did is they do the harmonization, and this harmonization involved in few phases. Okay, so IISc, which is established in 1973, later on in later on in 2001, replaced by ISB. Okay, so it's only the International Accounting Standard Committee. Just now it's become board already. Okay, so this ISB is actually the bodies that issue the IFRS. In Malaysia, we have the MASB, which issue the MFRS. Okay, so the ISB objective is actually they try to shift. IISc just now they only emphasis on harmonization, but for ISB they shift the emphasis from harmonization to global standard setting or conversion. So ISB try to promote the use of one single set of accounting. So the main aim is actually to develop a set of high quality financial reporting standard for the global use. Okay? So this is the structure of the ISB. So if you look and compare with the MASB, the structure more or less the same. Okay. So what the ISB did in formulate one single set accounting standard is they follow the principle-based approach rather than rule-based approach. Okay, so standard, what they do, instead of they use rule-based, so rule-based as we already discussed in chapter 1, rule-based is very detailed and it's enforced by law. Okay, so it's a little bit detailed. It's specific. But what ISB do, since we want to implement this one single set to all countries over the world, so they follow the principle based. The standard that ISB produce, which is IFRS, is based on general principle. The general principle, it's not specific. Okay? The general principle for recognition, measurement, and reporting requirement for transaction. That's why if you look our MFRS, which is adopted from the IFRS, the reset, the recognition, they still give you alternative, and the element in the standard is it's more general rather than specific. Okay. So this is ISB framework. So they created the ISB framework is created to develop accounting standards systematically. So this framework for preparation and presentation for financial statement is actually adapted by ISB from the IISc in 2001. So what is the scope of the framework? They try to, the scope is objective of financial statement, qualitative, okay, of financial statement, definition, recognition, and measurement of financial statement, and concept of capital and capital maintenance. Okay, so what is the qualitative characteristic of financial statement? This one you already learned in FA1, I think, and it also, if I'm not mistaken, in audit paper. So basically, there are 4 characteristics. We said understandability. So what is understandability? Meaning the user or the reader of financial statement understand when they read the financial statement. They understand what the financial statement try to present. Relevant, we are talking about the information in the financial statement is useful either for making prediction or making a decision. Okay. Reliability, you can rely on the information statement because the information statement prepared is neutral and represent faithfully. And of course, we said a good financial statement, the quality of financial statement must be comparability. Either we can compare one accounting year to another accounting year or one company to another company. Okay, so this is proposed changes to existing framework by IASB and FSB. What is IASB? What is FSB? IASB is based in UK. Okay, FASB is based in US. Okay. So IASB and FASB, they work together. Okay. They work on existing framework from IASC just now to provide basic for developing future standard by boards. So this is basis of the project of IASB and FASB. Objective and qualitative characteristic, element and recognition, measurement, reporting entity, presentation and disclosure, purpose and status, application to not-profit, and lastly, finalization. Yeah. So what is the element of financial statement? So this is the one that you will find in the standard, which is the definition, the recognition, and the measurement. So one of the agreements that produced by the joint venture between IASB and FSB, or the work together between IASB and FSB, okay, what they did is they produced one we call no work agreement. So this is proposed changes by both body IASB and FSB. And the detail of no work agreement you can find in you just Google the no work agreement, then you can find the detail of the no work agreement. Okay. So in the presentation of financial statement, there are need for the single standard providing guideline for the presentation of financial statement. And the guideline must be, the scope of the guideline must be the purpose of financial statement, okay, component of financial statement, and overriding principle for the fair presentation. Okay, and lastly, of course, it must include the accounting policy. Okay. So the presentation of financial statement is based on a basic principle and assumption. Yeah. And also, we are talking about the structure and content of the financial statement. So they try to align this the component. Okay. Okay. Next, we are talking about first-time adoption of IFRS. Okay. So the IASB, they produced the IFRS 1. So what is IFRS 1? IFRS 1 is first-time adoption of IFRS, where this standard is provide a guidance for the company which is the first time adopt the IFRS. Okay, for example, before they adopt the national standard, okay, then they try to adopt the IFRS. So since it's maybe the company will find a difficulty in adopting the IFRS. So what the IFRS 1 provide is for some standard that allows the FRS 1 is actually allow exemption when cost outweigh the benefit. So they allow for this one. But this one is only for the first time company. Yeah. So there are evidences actually. So if we said just now we are talking about the convergent. Convergent is using of one single set of standard. So either it can work or not. Okay, so there are evidence that support for the IFRS. For example, it said that adoption of IFRS by EU, okay, since 2005. IOSCO also endorsed IFRS for cost listing. Okay. IFAC G20 Accountancy Summit in July 2009 is also renewed the mandate for the adoption of one single accounting standard. Okay, and the latest survey by the IFAC Global, it said that the IFRS, the adoption of IFRS emphasizes that investor and consumer deserve simpler and more useful information. And if we look, this is till 2011. Japan, Canada, India, Brazil, and Korea already adopted IFRS. Of course, they didn't adopt the full set in one go. They adopt slowly. Okay, maybe Japan, they adopt 3 standards first, then followed by another 2 standards. So the adoption is phase by phase. So of course, even though the IASB, FASB, they try to do the conversion, then there are some concern actually about the adopting IFRS. Okay. And some of the concern is they said that they are too complicated for some companies. Okay. Another one is using the IFRS as the basic for taxation could be a problem. Another concern is some IFRS, such as those related to financial instrument and fair value accounting, are controversial. Okay. Next is IFRS. We said the IFRS, the first concern just now, is too complicated. So even though IFRS 1 is a guideline for the first time adopters, but it said that these guidelines is inadequate. Okay. Another concern is in countries that do not have well-developed capital market and where the user are certified with the local standard, the adoption of IFRS would be of little benefit. Okay. And there could also be issue in translating IFRS to different language. So this is the convergence. We said just now convergence between IASB and FASB. So we are talking about the Norwalk Agreement reached in 2002. So IASB and FASB pledge for compatible financial reporting standard and proper coordination of work to maintain the compatibility. So what they do, this is among the project between IASB and FASB. First, they have joint, this is among the effort that did by IASB and FASB. Okay, they are the key initiative. First, they did a joint project. Of course, this project we set to address the issue of the some issue in the IFRS. Number 2, they are short-term conversion. They remove difference between IFRS and US GAAP. Okay. And IASB, they put a license, okay, LO, IASB member resident in the FASB. Okay. And in perspective for IASB, FASB, they didn't put the member in IASB, but they closely monitor IASB project. Okay. They also do the convergent research project, which this research project is actually, the purpose is to identify all of major differences between IFRS and US GAAP. And the convergent potential, FSB also assess the agenda items for possible cooperation with ISB. Okay. But when we look, is actually this is following the global financial crisis was when there are financial crisis in 2009. So the both group, the ISB and FSB, they form one committee which called as Financial Crisis Advisory Group, FCAG. So in July 2009, FCAG report addresses the following. Okay? The need of effective financial reporting, the limitation of financial reporting, okay? The convergence of accounting standard, and the standard setting, independence and accountability. Okay. The last topic, the last issue in this topic is Anglo-Saxon accounting. So we are talking about, this is the accounting system prevalent in English-speaking country, which is including US, UK, Canada, Australia, New Zealand, of course in Malaysia. So there are fundamental features for Anglo-Saxon accounting. First, if we look on the firm level, in the firm level, the Anglo-Saxon accounting emphasizes more on professional rules and self-regulation. Okay. Second feature, if we look on the perspective of investor orientation, the primary aim is efficient operation of capital market. So that's why the need for the transparent and fair reporting of financial statement. And Anglo-Saxon accounting given a less emphasis on prudent and measurement of taxable income or distributed income. So this one we are talking about substance of a form. Okay, so that's it for the topic 4. Okay, so we will see again. I will see you again in the next topic. Thank you.